Good morning and welcome to TOITOI Japan Market Radio, December 22, 2025. I'm your host here in Tokyo, and this is the daily briefing for global investors tracking Japan's markets. Let's dive straight into today's session with our portfolio manager.
Thanks for having me. We had a strong day across Japanese equities. The Nikkei 225 closed up 1.808% at 50,402.391, while the TOPIX gained 0.535% to 3,572. The Mothers Index also edged higher by 0.482% to 2086, though J-Rights pulled back 0.709% to 2030.5. On the currency side, dollar-yen moved sharply higher by 1.137% to 157.355, and we saw commodities rally with gold and yen terms up 2.7% and crude climbing 1.853%.
That's quite a move in dollar-yen especially. Let's start with the currency story because it's been front and center for Tokyo watchers. We're seeing headlines about the yen sliding as traders test Tokyo's patience. What's actually happening here?
Essentially, currency traders are probing the limits of how much yen weakness the Bank of Japan and the Ministry of Finance are willing to tolerate before they step in. We've seen dollar-yen push through 157 today, and the market is trying to figure out where the intervention threshold sits. This is a classic game of chicken between the market and the authorities.
So why does this matter specifically for Japan right now?
It matters for three main reasons. First, there's policy signal risk. If the yen slides too fast, the BOJ or Ministry of Finance could signal tighter monetary conditions or even directly intervene, and that would completely disrupt current market expectations. Second, we have this inflation versus competitiveness trade-off. A weak yen is great for exporters on the surface, but sustained depreciation pushes up import costs and inflation, which complicates the BOJ's entire normalization path. Third, there's the capital flow angle. Aggressive yen weakness could trigger official commentary or action that creates sudden reversal risk for anyone running carried trades or cross-border positions.
And how does this feed into equities and rates?
For equities, the Nikkei and TOPIX, it's a double-edged sword. Short-term, weak yen is positive for exporters, and that's part of what we saw today. But the risk is that intervention or a hawkish BOJ signal could trigger sharp corrections. On the yen itself, we should expect volatility near these intervention thresholds, so traders really need to monitor official commentary closely for any floor-setting attempts. And for JGB yields, if yen weakness forces the BOJ to signal tighter policy or higher rates ahead of schedule, 10-year yields could spike, which would pressure both bond valuations and equity multiples.
So this is really a near-term tactical test of the BOJ's commitment to tolerating a weaker yen. Shifting back to equities, we saw the Nikkei rally over 1% today, and SoftBank was a major standout with a surge of 6.14%. What drove that move?
The Nikkei actually closed up 1.03% in some reports, but the key story is the breadth of the rally. SoftBank's 6.14% jump was the headline, but what matters more is the strong advance decline ratio we saw across the board. That tells us gainers significantly outnumbered decliners, so this wasn't just a handful of mega-cap names dragging the index higher. It was genuine market-wide participation, which is a much healthier technical backdrop.
Why is SoftBank's performance particularly important here?
SoftBank has a substantial weighting in the Nikkei 225, and it acts as a proxy for Japan's tech and growth exposure. When you see a 6% plus move in SoftBank, it typically signals renewed investor appetite for higher growth Japanese equities. It suggests sentiment is shifting away from defensive positioning toward riskier parts of the market. And because the rally was broad-based, it reduces tail risk concerns that we often see when only a few stocks are doing the heavy lifting.
What does that mean for the yen and yields on a day like today?
On the yen side, the risk-on mood we saw today typically weighs on the currency as carried trades attract capital outflows. However, the daily gains were still modest in the broader context, so the FX impact was limited for now. For JGB yields, Equity strength like this can encourage portfolio rotation into riskier assets, which creates mild selling pressure on JGBs. 10-year yields could drift higher if this momentum persists, especially if investors start pricing in a better growth outlook or faster BOJ normalization.
Meanwhile, looking ahead to next year, we've seen forecasts coming out for the Nikkei and other Asian indices for 2026. How should global investors think about these outlooks?
Strategic equity forecasts like these are important because they help global investors calibrate their Japan exposure within broader Asia allocations. Japan is the region's second largest economy, and the Nikkei plays a bellwether role for yen carry sentiment and corporate earnings recovery. When analysts publish guidance like this, it directly influences capital flows into Japanese equities and portfolio hedging decisions heading into the new year.
What kind of impact could these forecasts have on markets in the near term?
For the Nikkei and TOPIX, analyst forecasts typically drive tactical positioning ahead of the new year. If the 2026 guidance is bullish, it could support continued equity inflows and keep valuations elevated. Cautious views, on the other hand, might prompt profit-taking or sector rotation, particularly among exporters that are sensitive to FX moves. On the yen, positive equity outlooks can sometimes support currency appreciation if they imply higher BOJ rate expectations down the line. Conversely, cautious views may weaken the yen if they trigger broader risk-off sentiment. And for JGB yields, market positioning ahead of 2026 will depend heavily on whether these forecasts embed assumptions about BOJ policy normalization or growth acceleration.
So it sounds like there's a lot of uncertainty embedded in how 2026 plays out.
Exactly. The interplay between BOJ policy, yen levels, and equity momentum is going to be the key story for Japan next year. Today's session gave us a taste of that dynamic with the yen testing intervention levels and equities rallying on broad participation. But whether that continues depends on how the BOJ navigates the inflation and currency pressures, and whether corporate earnings can support current valuations.
Let's recap the main themes for global investors today. We had a solid equity session with the Nikkei up 1.808% and broad-based participation led by SoftBank's rally. The yen weakened notably to 157.355 as traders test Tokyo's tolerance, and that creates both opportunities and risks for carry trades and intervention scenarios. And looking ahead to 2026, forecasts are starting to shape positioning decisions for the new year.
That's a good summary. The bottom line for today is that we're seeing a healthy rally with broad market participation, but the yen move is a reminder that policy risk is never far away in Japan. Investors should monitor SoftBank earnings and tech sector momentum as key drivers of sustained upside, and keep a close eye on any official commentary from the BOJ or Ministry of Finance around yen levels.
If you're a global investor following Japan's markets, this is the kind of daily insight that helps you stay ahead of the themes that matter. Consider subscribing to TOITOI Japan Market Radio for more daily briefings like this one. Thanks for joining us today, and we'll see you in the next session.
Thanks, and good luck out there.